welcome in your church. Because if you want a definition of homelessness, listen to what Jesus Christ said about himself. Foxes have dens and birds have nests, but the Son of Man has no place to lay his head. There was nowhere for Christ to put his head down at night because he had...
What's going on, guys? Y'all ready for today? Y'all can hear me good? Yeah, I miss having data too. I'm not expecting like we're gonna talk about it though. We're gonna talk about it, but yeah, this one today is definitely a huge focus. All right. Give it a few more minutes. We get it started. What's going on, guys? Good morning, Anthony. What's up? Both Andy, Anthony, Carlos, Daniel, David, Georgina, Kelly, Nate, Natalie. What's up, guys? Ricardo. I see a Big Mac. You seem new. I haven't seen that name. All right, guys. All right. So how y'all guys' week been so far, trading wise? Successful week? Had a bad week? Well, we go through the prep is gonna be pretty quick, but just let me know how your guys' week going so far. All right, so starting off, we got CPI data today. And then we also have PMI afterwards, and then U.S. Michigan inflation expectations, right? But the focus is going to be at 8:30. That's just going to be the main priority for today. Let me just go live.
Recording in progress.
So we understand that the government shutdown is still in play. So the feds still don't have a lot of data like moving forward to most likely predict what's going to happen next year. But Jerome Powell already said, right, just from his comments last time, that they already have enough information to know what they're going to do for these next two meetings. So markets is already expecting for this meeting and the next meeting to be an actual cut from the feds. But depending on what happens today, it could impact future interest rate decisions by next year. Make sense, guys? So whatever happens today, it might not cause a difference from the overall projection of where interest rates is going to go for the next meeting, unless we get a very strong beat, right, where it's a no-brainer. Like, and I'll go over the numbers and I'll explain why. But just to throw that out there first, right, we have to understand that this meeting, right, might not make such a huge difference to money markets, right? They're already pricing in rate cuts. They're expecting QE next week, QT, the ending of quantitative tightening next week. So depending on how higher inflation is, that might cause the key difference, all right? But what it could change is next year's projections, all right? So the entire markets, everybody's going to be focusing on this print because we haven't had any data. So we're going to see probably very, very big reactions. All right, guys, like we probably see some very volatile reactions. So if you can't catch it, it's okay. But I will let you guys know probably the best probabilities to what might be a little difficult to take. And then through all of that, don't look at this as a signal. Focus on whatever pair you guys want to trade. Like right now, what is the pairs you guys want to focus on? Is it gold, UJ, Nasdaq, US 30, GBP, GBP, USD, even GJ, right? USD, JPY, Euro, USD. What are the pairs you guys want to focus on, right? Because this impacts the dollar. It's going to impact the US stock market. Also impacts gold, right? So what are the pairs that you guys want to focus on? And then when I hit it, you just look at that pair, right? Depending on the data and the reactions, you should have a little more confidence, but based off the move. The way you enter the trade is up to your risk tolerance. If it's too fast, it's okay. If you enter a good trade, it's okay. Where you take your profits is up to you, right? How you break even, where you put your stop loss. The volume might be very big for this event because of the just because we haven't had data in a very long time. So markets might overreact, and then we could possibly see a little bit of recovery. And understand that today's Friday. So the best thing that we should look forward to is probably a clear print across the board that is a no-brainer. If we have to look at this print and then we have to second guess, right? We have to go, not really sure about this one, right? Like if we have to go into that like expectation where we see a print and it's very hard for us to comprehend what's going on, that's not the type of situation we want to be in, right? So we want to make sure that we can understand the print and understand what's happening. Okay, guys? So like that's what we have to pay attention to. So when it comes down to this, when we're looking at this data now, let me just get this straight real quick. Just getting myself ready. All right, so we can see what inflation right now. Expectations so far, they're expecting this print, right, to come out pretty much as expected, to tell you the truth. We're not really. They're expecting this inflation print to stay the same as the previous. Like, that's just like, I don't even think, because it's just really random. No real leading indicators leading to this meeting. That's probably why we don't have a lot of guessing going on here, right? So we're going to focus on the core year to year. They expect a 3.1, which is the previous, right? If we could see it go higher than the high, like a 3.3 or 3.5, I think that would be just the like, oh snap, like, okay, inflation is actually rising. Like a print like that, a 3.5 or 3.4 or above, that's where we will look at that and go, okay, this is more serious than what we thought, right? That is the type of print that we would look for to see if we can see an actual change, because these are like pretty much all the banks' expectations of where they think this inflation print is going to go. So the outlier is more like a 3.3. If we get above a 3.2, that to me would probably shock a lot of people. Higher inflation, we're going to see a hawkish reaction. Okay, so very simple when it comes to these inflation prints, right? You guys can see the numbers. If we get if we get higher inflation across the board, we're going to see a hawkish reaction. We're going to see stronger yields, stronger dollar. We're going to see weaker equity markets, and then most likely we'll see weaker gold. Okay, will a higher print make the Feds pause interest rates next meeting? That's the question that we all have to ask. It is a possibility, like it's a possibility, but I don't think it's going to happen. But it may impact next year's rate decisions. Okay, but we still will get that hawkish reaction. But the Feds already have enough data so far to determine what they're going to do for this next meeting. Make sense, guys? So if we want to look for the opposite, we just need to see inflation lower than expected. If we can see inflation lower than that 3%, if we could get closer to that 2.9, 2.8, anything lower than that, which I highly doubt, but if we could see inflation go below 3%, that their target range is from 2 to 3%. That's their target range. So now we're going to be in that range. If we get lower inflation across the board, that's going to be a dovish reaction, which is weaker dollar, weaker yields. We're going to see stronger equity markets, and then we're going to see most likely stronger gold. Okay, so that's, to me, a weaker print goes along with the bigger picture. So that would be the easiest opportunity, but we have to understand it's already expected. Okay, so maybe if we get a weaker print, I think it would be best to most likely trade gold or equities higher, because it just loves that, right? Those pairs love weaker inflation. Dollar has been bearish this whole year. I do like that we have a little bit of a recovery when it comes to the dollar. I do like that. I do like it as well, that we have a little bit of a recovery. We're close to that 100, like we close to 100. So I kind of do like that as well, to look for opportunities. But the Fed's already told us they are paying attention to labor data, right? That's really what is determining their next step, is how labor data is impacting the markets. They already know inflation, right? From them, for the moment, they already have high confidence that inflation is going to hit their target goal. They're already confident in that. So that's the reason why, this inflation print that we have right now it's already expected. It's not going to really change as much. It's not like how it was 3 to 4 months ago, right? Because inflation is now already closer to hitting their target eventually. They know that inflation is going to hit their target. But it could be a surprise today, obviously, depending on the print. But understand that depending on what happens today, if we get a higher print, we could expect those moves. But from the bigger picture, right, it's a possibility that Let me just fix this up real quick. Yeah, like from the bigger picture, it's just a possibility they might already be expecting a cut. So we could see reversals from a higher print, but not right away, but probably by next week or the week after that, because they're already expecting quantitative tightening to end. They're already expecting the Feds to cut rates. They already know that inflation is most likely going to start lowering. So the focus is labor, which we're not getting that data, right? But this inflation print, we should see some easy moves. So just to give you guys the context behind it, so you guys could understand, like, so if somebody asks you, hey, what's going on? Like, you already know, okay? So now we're going to look at ideas. All right, what pairs you guys are going to be looking at, guys? I know you, Carlos, you're looking at gold. I think gold could be a good one, or you could wait till the noise. Like, it don't matter. You could wait till the dust settle too, but I wouldn't be surprised. You know, Trump is already up. He already talking. You know, we already know he about to start his shit this morning. Like, we already know he about to start his shit. Yeah. Yeah, like we already know. So we gotta be prepared for that. We gotta be prepared, man. Like, he gonna start his shit. This will be funny. You watching the CPI right now, brother? All right. So we're gonna look at trade ideas, areas of interest to focus on. Oh, it's afternoon over there. Yeah. What time is it in the UK, Randall? Yeah, that's fine, Leo. Hell yeah, make your decision. It's fine. Like, if you want to wait, let the dust settle. I mean, you could afford to be patient. It's really good. Saudi Arabia, what time is it over there? I remember we had somebody from Japan. I don't know what happened to him. Yeah, I know your time zones be crazy. I know the best time zones for for a trader is London. Like, I really, because you're like, your afternoon and mornings is New York session in London, which is great. Asian session is like when y'all supposed to go to bed. So that's like the best time to be a trader. Yeah, you're missing the gold moves at 9. Yeah, it sucks. Um, yeah, Singapore is terrible. Yeah, I know we had it was Singapore he was from. All right, so I'm gonna do a color coordinated. All right, we got 10 minutes. So when the dollar, if we get weaker inflation today, we're gonna see the dollar is gonna start breaking below. The dollar is just gonna give us weakness, but we need to see breaks of structure. So the confirms is when we see dollar is breaking below that area of support. So if that happens, we're gonna see gold. We're gonna see gold spike higher, break above structure. Then a dovish reaction. We're going to see equities pushing higher, breaking above that resistance. Same thing with the US 30. We're going to see that area happen. S&P, same thing. If you guys are looking at S&P, it's going to be the same thing like that, right? Looking at GU is going to start breaking above resistance, okay? Euro USD could be a good option too. I like the range in Euro USD. That's going to break above structure. USD JPY is going to break below that support. So this is a dovish reaction that we want to see. And also the yields. We want to see the yields push lower, right? Following the print. The yields tell the story on how the market is really expecting, right, from this data. If we get a hawkish reaction, we're going to see the dollar gain strength. We're going to see gold break that support and push lower. Okay, so that's what's going to happen. We're going to see Euro USD, USD JPY pushing higher, breaking above that resistance of 153.0. We're going to see euro dollar breaking below that 1.16 thousand to break below that support. We're going to see GBP USD breaking lower too, which I think would be a good option. But Nasdaq, we're going to see a break below that 25,200 area, and then we're going to see US 30 breaking below that support. So that's going to be a hawkish reaction, okay? So that's what's going to be key for this event. All right, guys. So we could be all on the same page when it comes to that. So now we just gotta wait. So all right, so we can talk about like what is going to be the best reactions, right? What we want to focus on. Put it here so you can see the print together. So I'm a man. I don't really want. I want to look at Euro US. I like Euro USD, but I like UJ as well. Like it's hard because this is why I'm gonna explain, right? Because if we get a miss, right, I like the idea of buying Euro USD. If we do get a miss, we get a weaker inflation print. I think gold buys will also be the best bet, right? Gold pushing higher be another key reason for a miss today. So gold would be a good option, especially equities pushing higher. The reason why I don't want to take a sell in UJ, because y'all know I like UJ. It's just because because Japan, right? They're the weakest interest rates now. They changed their policy, right? They're doing more stimulus, so that weakens the yen. So I would rather take a buy on UJ, but to be neutral, I think it's okay to trade gold and equities to be very neutral. I think all the pairs is going to react to regardless, but like GU could be a good opportunity if we get dollar strength, right? We had that lower inflation print from the UK, right? That could be a good option if we get a beat. I feel like everything is going to be neutral, right? Whatever the print goes, we're going to see all the pairs react, hawkish or dovish, right? What we got to stay away from is if the print comes out as expected, right? So if this comes out as expected, where we see that the data comes out the same, no trade. If it's mixed, no trade, right? But then we gotta have to use our big brains, right? Like if that happens, then what? My idea is the markets is gonna react dovish anyway, because we're gonna see equities rise, gold probably rise, dollar might weaken, but because they're already expecting cuts, right? So regardless if this has come out mixed or if it comes out green, right, we see a higher print. But it's like we see the forecast 3.1. If it comes out at like a 3.2, and then we can see the monthly 0.5. It's no surprise across the board, but we see a higher print. I personally think it's not. I don't think the markets is going to hold that expectation so long, right? Because it's not surprising them. So it's not going to change the bigger picture. But immediately we could possibly see dollar strength, and then we could see equities push lower. But I think it's going to recover because it's not a surprise. It's not going to change the expectations. Make sense, guys? So we just have to be cautious. Amsterdam, what's up, man? But what I'm gonna look at, man, it's a tough one. I'm gonna look at UJ. I'll just go with my gut. I'll just look at UJ. I could be wrong, guys. I could be wrong. I could be wrong. I would like to take a miss, but I could be wrong. But neutral, if y'all like Nasdaq, right? I would say if we get a hawkish reaction, guys, I don't like the idea. Equities could push lower from a hawkish reaction, but we could see the reversals, right? Which will probably be better for you guys to hold for intraday trades. Because if QT starts next week, we see that the Feds cut interest rates, that's still better for buys. So I wouldn't be all over. The sells might be aggressive if we get a higher inflation, but it might reverse afterwards, and that's your better opportunity for buys. Make sense? Same thing for gold. If gold pushes lower because we get a higher print, look for the reversals afterwards, because obviously what the Fed's bigger picture is going to be more important than this print. So if we do get green, if it's not a surprise, guys, if it's not a surprise, all right, still expect a hawkish reaction, but be very cautious. Take the scalps and then get out, right? Because the reversals could happen just like an hour from now because they are already expecting a cut. But if we get a miss across the board, lower inflation across the board, that goes along with the bigger picture, right? So what is the reason to not take equity upside? Why wouldn't you want to take gold upside, right? Why wouldn't we want to sell the dollar? So that's why I think a weaker print, if you guys have to be very direct and don't take nothing but that, I would say look for a weaker print because it goes along with the bigger picture, right? The surprise would be if we get a higher print, which the moves could be aggressive, and then we'll probably see reversals later on. We just don't know when that later on is going to be. Is it going to be in the next 2 hours, or will it be next week, right? But the surprise, you could get a very big reaction, right? So that could be an opportunity too. That's why I'm saying it's neutral. We're going to see a reaction regardless, but for swing trades, it depends, okay? So we just have to be cautious when it comes to that. Today will be Judgment Day. We celebrate. Yeah, there's gonna be so many people will be blowing their accounts, man. The goal is like to be patient. Yeah, I'm gonna look at UJ because I expect the yields, and then I expect the yen to do it. The focus on the yen is gonna do the opposite of U.S. yields. So, and it's inflation, so I stick with a currency. But I know I'm going to be mad when equities push higher off of miss. All right, so higher inflation, that could that point towards stagflation because of fear? I mean, we don't have the data, and it's a good question, but we just don't have the data. That's why. So the stagflation, I think they're going to be very cautious on wording. You know, they want to be very cautious when it comes to their wording. But it is a good question though. But I don't think that we don't have the data. So we got PMI after, like at 9:30, we got PMI, and then we got, we could see what happens with PMI too. So we could be on a safe route, right? You know what? That kind of sucks because like they can't see my EpiPen. I don't think y'all can see my EpiPen, right? Oh, you can. My screen was just paused. Okay. Yeah, I can. Okay, cool. I just blew 2 accounts. Yeah, damn, dude. Like, join the private group. All right, guys, we got 50 seconds. Yeah, yield's already spiking up. It is a giveaway. Like the yields is already spiking up too. Moves might be extremely quick, guys, because the algorithms, everybody is focusing on this. So if you don't get a trade, it's okay, right? Because it's very highly anticipated right now because we haven't been having any data. So this is why, like, it's okay if you miss out on this and wait until after, so we can just view it. But at least you guys know the direction. All right, so 7, 5, 4, 3, 2, 1. See what we get. All right, so we get a weaker dollar. So we can see weaker dollar coming in place. All right, so this is great. This goes along with the bigger picture. All right, we already see that we got lower inflation. It's not a surprise, but it goes along with the bigger picture. Okay, so this should help equities push higher. This should help gold push higher. This should push dollar lower. You see how the yields are spiking up? That's why it's like you don't want to wait, and you want to wait till after the data. So this does support weaker dollar. All right, but again, this already goes along with the bigger picture. Nasdaq, that shit had a huge delay. Like you guys that trade Nasdaq, that shit did not move until now. That's crazy because I'm looking at Nasdaq and it wasn't reacting. So I'm like, what the hell's going on? But that shit gave y'all a great opportunity to enter. But this is a dovish reaction. You caught it, Anthony? Hell yeah. Like, that shit was so delayed. That shit allowed people to enter on that. Because there's no way that, like, dollar reacted first, but then Nasdaq was not moving at all. And even gold wasn't even reacting. Like, that shit was slow. Dollar was very quick. But gold and equities moved extremely slow. Like, that shit was so slow. So there's no reason to miss out on that. But yeah, I caught my UJ. All right, so now we got like this. We see the print, right? So it's a 3%. This goes along with what the Feds want. This goes along with what the whole world wants. All right. So this shows, is this changing anything? Not really, right? Because we already expected this. So this is where this is not a surprise. Okay, guys, this is not a surprise because the markets is already expecting this. Dollar already bearish because of this. Equities is already higher because of this. So this just confirms the overall picture. Okay, so it's not a surprise. So now we just need other data points like PMI, right? Coming lower. Michigan sentiment lower. Then this should be the direction for the rest of the day. Most likely we should, like, because equities is already pushing higher, right? So we got the rate decision. This confirms the cut. This confirms everything. So it's not a surprise, okay? But this does confirm the direction. So this is what I meant is you get in, you could get out, right? Because this doesn't really change anything. Like if you want to hold on to your positions, I expect that today should go in this direction. We should see weaker dollar, stronger equities, stronger gold for the day because this is a highly focused event. But if price recovers, it's expected because this is not a surprise. If it was like if everything was below that 3, if we was like at a 2.9 and 0.2, right, 2.8, then that's a surprise because it's like, oh shit, inflation is really lowering more than what we expected, right? So that may increase the odds for, oh, should we cut 50 basis points, right? So that's where the surprise matters the most. But for this, you got your opportunities. You get what I'm saying, guys? So now leading towards the rate decision because of this type of print, we already expect that they're going to cut rates. We know that if they want to start QT, we know that. So at least like Anthony, Andy, your question, this doesn't impact stagflation now, right? So because it showed that inflation, I feel like this is still on target, but it is lower. But at least this doesn't show stagflation fears, right? So now this gives you a reason for not to sell equities. So now we have a direction when it comes to equities, and we can take advantage of that. But yeah, I was thinking that without the labor data, we would know. Yeah, because without the data, we ain't gonna get much. But lower inflation, and now if we get labor data, and the labor data comes in lower, man, that's gonna be amazing, bro. Like that I would feel like the central banks are doing their job. That just shows. Yeah, Darren, I'm surprised it was lower too. I was expecting a higher print. To tell you the truth, I'm very shocked that it came in lower too. Also, I wouldn't enter the CPI due to spikes coming from X. That was a good buy. I don't know what you talking about. So he said gold to 7,000. I mean, shit. At this point, we don't even know. Yeah, like that's why I don't like the buy and the sell limits because like it's because of that. You know, like you're gonna get clipped. You know, like those the spreads because the spreads do widening up, so it's gonna mess up. Took about EU. Yeah, good job. Yeah, Kay, that's a good job. If you took EU buys from earlier today, yep, this weaker dollar does help. Very good confirms. What trades? What pairs you guys are in? Anybody took any trades or yeah chickened out? It's okay. There's no right or wrong answer. You holding? No, I closed the gold. I closed gold buys. You took gold, John. Yeah, good job, guys. Yeah, I closed gold buys last night. So I didn't like. Yeah, you want to go? Good shot, Reese. Yo, Reese, you've been killing it, brother. Like we already knew that, so it's not a shocker. Yeah, gold. Yeah, motherfuckers are crazy. Good job. Yeah, easy, right? You get your money, like bam. You took 2 entries, Mark. Mark, good job, man. Were you on a plane? Where you going? Where are you at, Mark? Good job, dude. How's trading been? You at home? All right, cool. It's gotten easier, right, since you joined? Yeah, UJ. I had a bad feel on UJ too, Blair. So it's okay. I have faith in it. Traders go well. Good job, dude. I'm happy for you. Yeah, because now look at the currency monitor, right? Because if the yield's pushing lower, we can see that the yen is gaining strength now. So as long as that holds, like as long as we can see that inverse correlation, we should be all right. We should be all right. But like I said, like the reason why I didn't like UJ is because of physical policy. I don't like that because overall the Bank of Japan, they're most likely going to follow government. So what's going to happen is it's going to weaken the yen currency because they're doing stimulus. So if like an example, it's hard to pick, but like GJ buys afterwards, could probably be a good option. Like that's the only reason why I don't like the yen is because physical policy. Like we're gonna be seeing a weaker yen overall. So just be cautious when it comes to the yen pairs. So yeah, take your scalps, whatever. But we should get this direction. That's why like Euro USD was good, GU was good, gold was good. Saki, I saw that your gold trade you held like 500. I was so blown away. Yeah, they would use like 100 lots. Yeah, yeah, that's how you could tell is because when they use like big lot sizes, all it takes is one trade to fuck your whole account up. Yeah, I do expect weaker dollar. There's no reason for like obviously dollar could recover, right? So like long as dollar is below 98.900, we should be all right, for the session. But I expect recoveries because this isn't new. Make sense? So that's why I said this should be like more scalps because this is not new. Like we already expect that this is going to happen. So lower inflation, and it's not a surprise. We're going to see the algorithms give us those spikes. Yeah, that's why, because it's nothing new. But maybe because it's not NYSE yet, right? It's only 840. So let's see what happens at NYSE. Okay, so that's when we could see if we could get continuations moving forward. All right, so that's what we will pay attention to is let's see what the momentum of NYSE. Let's see if we could get some volume. Then I would only want to take dollar weakness, gold upside. If I see the dollar reverse, it wouldn't make sense, right? So I wouldn't take it, unless we have some reason, which I doubt, right? I'm not expecting, I could leave this here. Like, I'm not expecting any Fed speaker to come out and like say something opposite of what we got. This should confirm rate cuts. So I'm not really expecting. Tiara, you took some today, Tiara? How was your week so far, Tiara? I know you took a few of the gold trades. But was this week better? Amazing. Good job. Canada cheated and got caught. Profitable. Good job. Yeah. Yeah, so that's all I'm excited. Is the government shutdown over? Nah, it's not. Yeah, I took UJ cells. No, the government shutdown is not over. I think they need 5 more votes. Last time I heard it this morning. I think they need 5 more votes. I think that's what that is. I think that's what's needed next. This is the news feed. This is just like headlines that comes out every day. So we could track the headlines that come out. Usually like afterwards. I don't know when it's going to do it, but normally we're going to see like market bets are expecting like now a 99% chance of a cut for the next meeting. Like we're going to see something like that soon. Then that will be the catalyst for the continuations, right? Once we get the markets starting to price it in. It's like it's more like the CME. Could check here because like that's what's gonna happen next. This is not like I know like the only problem with this right here is just that it's a free source, right? But it takes time to update. So you can see like it's already when's the meet? October 29th. So next week, right? So you can just see, like, it's already damn near 100% priced in. So this is what I meant, that this is not a surprise, because it's already 100% priced in for a cut. So the fact that we had lower inflation, the Feds is already expecting inflation to lower. Markets already know the Feds is expecting inflation to lower. The markets is already pricing in a rate cut. So the fact that we got lower inflation right now doesn't really change the bigger picture. So that's why I tell you guys, expect the spikes, right? Those aggressive moves, but we could get pullbacks because it's already expected. All right. So the surprise would have been a higher print. Then this would have probably went to maybe 90%, right? Or 85%. Then the no change would have went up like to 10%. That would have been a surprise. That would have probably been a bigger move. That's when gold would have just melted. But then but the fact that we would have saw the ease is still above 80%, they were still going to cut rates anyway. Then we could see the reversals. So I thought that would have been the best opportunity, is if we would have had higher inflation, take those trades, let those moves happen, right? Weaker equities, weaker gold, stronger dollar. Then next week we look for the reversals. That could lead to the swing trades, because they was going to cut rates anyway. So to me, that would have been the best opportunity, because like, it's not predictable, right? So it would catch people off guard. But this is predicted. So that's why, the moves probably, like most of you guys is like, oh, the moves ain't as aggressive, is because of that. So hopefully that makes sense, right? So the pullbacks is expected, but I still expect for today, weaker dollar, weaker dollar, stronger gold, stronger equities. But if it doesn't happen, because we can't predict, right? We don't know what's going to happen in the next few hours, right? But I wouldn't want to, if gold breaks below like 40.51, that shows the trade is invalid. If Nasdaq break below 25,200, trade's invalid. If dollar breaks above 99.100, trade is invalid, right? So that's when you know. But this is why I was saying, like, scalps is the best bet, because it's expected. So it makes sense, guys. Just put a 1 if it makes sense. So at least you guys could understand the bigger picture. Yeah, exactly, Darren. She did have, that's what I meant. Like the new prime minister, she's more for stimulus. So that is dovish. So that means we will be expecting more of a weaker yen from a macro perspective. We haven't had the Bank of Japan rate decision. So like, we're not seeing, the market's is already pricing it in, but the yen is such a safe haven. So the yen is acting towards sentiment. But from a policy perspective, it is dovish. From a Bank of Japan perspective, a central bank perspective, it might lean dovish, because they're going to react towards physical policy. So yeah, so that's one of the reasons why, like, taking the UJ sales was a risk, but because of the yields is pushing lower, that does help UJ push lower too. But from a longer term perspective, the only way is if inflation for Japan will rise, and their policy is what's going to help increase inflation. But the problem is, even before, Japan's inflation wasn't rising the way that they was expecting to. So that's one of the reasons why, I wasn't looking for a stronger yen overall, because inflation still wasn't rising even when they had a hawkish administration. You know what I'm saying? So that's why it gives them the breathing room for it. What if it breaks, but doesn't close below the starting price? I mean, like, you manage it the way that you want. Like, I gave you that was your trade. However you guys handle it is up to you. We already hit those areas of resistance. We hit those take profits already. Like, you can see gold right here. We hit like 40.90. You look to the left. That's a zone. It hit that area. Nasdaq is at all time highs. So it's like, you pick your poison, what you want to do with it. But the only way is, like, if you see reversals. If we see like complete reversals, then you'll know that, okay, it's time to get out the trade. Yeah, if y'all want a better view, just go on YouTube. And if you don't mind, like the stream on YouTube, guys. So Yeah, yeah, man. I expect. Yeah, hopefully, let's see what happens. Like at definitely see what happens at 9:30. So we're gonna be chilling for a while. So what time? Yeah, we got about an hour to see what happens. Yeah, let's definitely see what happens at 9. We do got plenty. We got a lot of time. Yeah, like a lot of people is like anticipating a whole crisis. Yeah, I'll wait for Trump to tweet something. Yeah, he did earlier. He did earlier. But let's see if we can watch because I know that the shutdown. I believe they're like 5 votes away from ending the shutdown. I believe it's like 5 votes away. Yeah, let's see if we can see some updates on it. Yeah, like anybody took an airport recently? I know that's taking a hit too.
In other news, we are now on
USD mode.
Yeah, like I mean, I don't expect the data to. I don't expect the data to really matter as much. I think it's just we waited for like momentum. It's just not NYSE yet, so I think we're just pretty much waiting for that. Let's see. I know this was her speaking yesterday. Let's see what she says.
day 23 of the Democrat government shutdown. Senate Democrats have voted 12 separate times now to keep the government closed. Innocent Americans are suffering every day as a result. More than 500,000 civilian federal employees will miss a full paycheck tomorrow. Thousands of small business loans are going unapproved each month. This means almost $4 billion in capital is being withheld from small businesses across the country. The Democrat shutdown is also causing severe impacts at airports across the country. In one single day this week, the FAA had to issue ground stops impacting flights at Houston's George Bush Intercontinental Airport and Hobby Airport. 13,000 air traffic controllers who ensure that we all fly safely are continuing to work without pay. This is egregious and truly sad. Some of them are reportedly being forced to turn to driving for Uber and taking on other second jobs to make ends meet as the Democrats continue to shut down the government. Pilots are calling on Democrats to end this dangerous political game. The president of the Southwest Airlines Pilot Association called for the clean continuing resolution to be passed, saying, quote, "Our air traffic controllers and the broader air traffic system are already operating under immense pressure. A government shutdown only compounds that stress and threatens the efficiency of our skies." The Airline Pilots Association International, which represents more than 80,000 pilots, is sounding the alarm as well. They said this shutdown is undermining our system's safety. Resources are stretched thin, negotiations are delayed, and strain grows daily. With the Thanksgiving holiday approaching, we are nearing the busiest travel period of the entire year, when millions of Americans will go to airports to spend time with their loved ones. Let us be very clear from the White House today. If the Democrats continue to keep the government closed, we fear there will be significant flight delays, disruptions, and cancellations in major airports across the country this holiday season. If Democrats continue to shut down the government, they will also be shutting down American air travel. The White House is in constant communication with the air traffic controllers, with the airline associations, and with them, we urge Democrats to please pass the continuing resolution so we can just end this madness and this chaos and reopen the government. These are very avoidable consequences. The unnecessary pain, unfortunately, does not end there. Funding for the Supplemental Nutrition Assistance Program known as SNAP, which provides food benefits to low-income families, is beginning to lapse this week in some states. If Democrats continue to hold Americans hostage, there will not be enough funds to provide SNAP benefits for more than 40 million Americans on November 1st. That is next week. Democrats are solely responsible for all of this unnecessary pain. Why are they doing it? To give taxpayer-funded healthcare benefits to illegal aliens, some of whom are violent criminals.
Most of y'all, like,
During
heads
the 4
are, like,
years of Joe
exploding
Biden's
when she talks.
administration, the Democrats forced Border Patrol to admit illegal aliens into our country with no legal status and minimal screening. A significant number of these individuals are the worst of the worst criminals: rapists, pedophiles, murderers, and even members
I'm trying
of
to
the
get to the
terrorist
bottom of
watch list.
I
Despite having
believe
no
there's
legal
like 5
status,
votes
paroled
left.
aliens were able to file for
You
work.
know, like there's like 5. I think there's like 5 votes left to open it up. But yeah, like the first is coming next week. You know, and like y'all heard about the Section 8 situation too. Like what's gonna happen with ain't they like trying to take away Section 8? Like I think that would be insane. You know how bad like yeah, like the homelessness will pick up. Like I think they're expecting, you know, people to just go to like people. If people get out of Section 8, they're just gonna go straight to jobs, right? And then the labor markets is gonna increase. I think that's what they're expecting, but they don't understand. Like when people go through that, they go straight to survival mode, and that's what's gonna spark like more. Like that's gonna put more danger in the streets and stuff like that. So yeah, it's gonna be a pretty messed up 2 months if this drags on. So most of y'all know, like if they continue to drag this on, like that's when GDP is going to come lower. That's when the recessionary fears is going to come in, because the government shutdown is impacting jobs. They're not stimulating the economy. You know what I'm saying? So people is losing jobs, and then you start taking stuff away from people. It's just going to cause a lot more disruption. You know, especially happening before Christmas, like that's going to be insane, you know, like, so it's going to be pretty fucked up, like for the next 2 months, if this continues to drag on, you know? So I think that's what we have to, you know, definitely, you know, a lot of people, you were seeing this happen in real time. So it's not a surprise. You get what I'm saying? It's not a surprise what's going on. So you're going to see these things start to unfold, and then it's like, oh, well, this is how it started. So you guys going to be able to, you're going to see all of this stuff unfold. Just give it time, you know? Yeah, we got...
Build a website you love with Wix.
Yeah, we got about...
For your words, create.
Yeah, we got about 30 minutes. We got data at 9:45 too, so... CPI came out lower. We still got time. We're just chilling now, not really looking at much. So we got some time. Let's see what he says about this. Because now, like he's been saying this shit for years. But so there's nothing new. We all know.
We print money and do that. You want to buy financial assets. I'll give you, just take another minute. A lesson that I learned. I was clerking on the floor of the New York Stock Exchange in 1971. This was year after college and before business school on a summer job. And it was August 1971. I followed the markets a lot. And President Nixon, on August 15th, 1971, gets on the television and he says, basically, you know, that monetary system that we used to have, what money was, we're not going to have that anymore. It will not be, you can't get the gold.
Yeah, I'm expecting the continuations to follow.
They had no
but
value.
It's
They would
already
just get you the
expected,
gold,
right?
and then
So
you'd have the gold,
I'm
and
not.
we're not going to do that anymore.
That's why the
And I
moves
figured,
is
okay,
not.
Now I walk on the floor of the New York Stock Exchange
My bad.
the next morning, got there.
Yeah,
early,
so let me just
figured-
show you guys this, because we I already said this, right? I already said it. But look at this headline that came out from Goldman Sachs. CPI won't deter Fed cuts, right? Goldman Sachs asset manager says CPI report offered no surprise for the Fed and expect rate cuts next week. And in December to remain on track. So this inflation coming out lower just increase the odds, but it's not going to change any. He's already saying it's already priced in. So it's not going to change anything. Makes sense? So that's what he's really saying. But we are already expecting that before the print. So, but they're telling us after. But it's good that they probably already had that pre-written. Even if inflation would have came out higher, I think this comment would have came out anyway, right? Because I think they was expecting a higher print too. But this is why, I expect those moves to be impulsive and then see kind of reversals and recoveries because it's already expected. So either we see continuations today, right? Like after 9:30, we could see some continuations, weaker dollar, stronger equities, or we just going to have to just wait until next week, that rate decision. All right. Because it's expected. So it's nothing new. So that's why the scalps was the best bet. And they're coming out and they're actually saying it. Yeah. I love his story too.
To be that money was like checks in a checkbook. They had no value. They would just get you the gold, and then you'd have the gold, and we're not going to do that anymore. And I figured, okay, now I walk on the floor of the New York Stock Exchange the next morning, got there early, figured we're going to have some sort of pandemonium. And the pandemonium that we had, I thought it was a crisis, and the pandemonium we had was the stock market up the most in decades. And I went back, and I didn't understand that, and I went back, and I found out that the exact same thing happened on March 5th, 1933. It wasn't on TV, it was on the radio, and Roosevelt did the same thing, and the stock market and gold and all of those assets went up again for the exact same mechanical reason. So I learned two things. I learned, first of all, that I better study things that didn't happen in my lifetime before because they might happen again. That's what helped us anticipate the 2008 financial crisis. But I also learned that dynamic that when you print money and create that's a hell of a stimulant, but it also means you don't want cash. You don't want bonds. Cash is a financial asset. You don't want to commit cash. You don't want a bond. It's going to have a negative real return. Like, who wants bonds? You're going to have a negative real return. You want that? Okay. And you're not probably going to get the price appreciation through the bond. There are two ways you can make money. It goes up or it gives you a good yield. It's not going to give you a good yield, negative real yield, and it's not going to go up much more when you get down to that. So you don't want the bonds. Stocks have an asset. They're a reflation asset throughout history. So there are things that you want. You want stocks. You want gold, you want tangible assets, you want real estate, you want the things that are basically anti-money.
Tiger Woods built
Wow,
his
this comment
career
just came out
on
now,
forward thinking.
so you guys can see in the Discord. So there will likely not be an inflation release next month, and this came from the White House. So it's interesting, like, how come this inflation report came out then, right? So it's kind of weird they allowed. Yeah, this is good to see too, but it's kind of weird. Like, it's just showing that inflation is lowering, right? So it's a good chart to show, but it's like, why did inflation come out this month then, right? So ain't that interesting? I think they did it purposely. Like, yeah, we want the feds to cut. It felt like this is a play for them. They doing it as a play. Like, yeah, like, cut interest rates. They knew that this one was coming in lower, and they was like, all right, now cut interest rates. But next month, you ain't going to get it. So that's kind of like a signal that, are we going to see the lockdown last a lot longer than expected? You know what I mean? So I think that it's very interesting that this comment came out afterwards. So this could like cause uncertainty. Like, I think, yeah, and also saying that tariffs remain a wild card for the markets. So let's pay attention to news headlines too, because we could see like a lot of uncertainty. But as of right now, I expect this should still hold, But you get what he was saying, right? That, like, exactly what he was saying is back in the days, that's what Warren, like what he says, when the Fed start printing more money back in the days, what he saw happen was equities, the stock markets got higher, and he saw gold got higher. So every single time back in the days when he saw that the Fed started printing more money, it was a reason to buy equities and buy gold. And then he explained why, right? You don't want to be buying into why would you want to get bonds when you could just get into riskier assets? So he's like, this is what was happening 50, 60 years ago. and then it still plays on till today, and people still miss it. So that's what he was saying, right? So that's why it's a good thing to listen to these guys. And then people will tell you don't listen to, like, don't listen to don't follow data, don't follow central banks, when it's literally easy money, right? Like, it's no way that you could predict by looking at a chart until after the fact. Like, we understand to predict, like, what was the what direction the markets is going to go depending on the data. So if this came out lower, if we would have had a higher inflation, we would have saw the opposite directions. We would have saw dollar go higher, equities go lower. That's not a guess, right? So this is what it shows you where the markets is going to go. So imagine if you are a hedge fund, a billionaire, and if you understand this stuff, because most of us as retail traders, why do you lose? Over leverage, emotional, right? Over leveraging, being overly emotional, tight stop losses, right? Just not giving your trades enough breathing room. The reason why you can't do that is because if you got $1,000 account, risking 1% to 2%, you're thinking about your reward. So you're like, man, I don't make enough. Like, I ain't seeing enough profit. But if you have $1 million, right? What is 1%, right? So you look at it differently. But if you can't manage $100, you can't manage 1,000. You can't manage 1,000. You can't manage 100,000. So when you think about it from percentages and worry about surviving, that's how you could stay in the game long term. Makes sense, guys? But society teaches us to do the opposite. They want you to be aggressive, be quick, move fast, right? Get these things now, right? So just coming into the industry with that mindset, like it makes you over leverage. It makes you focus on greed. Nothing is never enough. Like, you got a 100 pip move right now and still expecting more out of it. Like, that's just how society is teaching us, right? And we continuously fall for that trap. So obviously your mindset in everyday life impacts you in the markets. You act very emotionally and you're just guessing 24/7, right? You're not waiting for confirms. You want to build patience, wait for reasons. Build the trading plan, build discipline, wait for opportunities. That's how you get rewarded. You get rewarded through your discipline and your patience. You don't get rewarded just because you want to over leverage and you just figuring, oh, I just want to wait for this and all the stuff that you've been learning in the past. It doesn't work that way. That's why thousands of traders trade that way. How come you see in the COT reports, it shows retail traders is in the opposite direction of institutions and by months, right? So what I'll show you guys, right? If y'all go back to the video we did over the weekend, dollar's been bearish since the beginning of this year because of what's happening today. Because of what's happening. They already knew that the rate cuts was going to happen. They knew this 3 to 6 months in advance because the data was already showing that this was going to happen already. So we're finally seeing it, all this happen now. And you're thinking in the markets in the present. When you're thinking that way, you're late to the party. When they started increasing rates like 2-3 years ago during Biden's administration, right? They was increasing rates. They knew this was going to be the cause and the effect. This is why Ray Dalio is a billionaire. Makes sense, guys? Like, this is why he's a billionaire. And we just have a video of him, right? Of him explaining that shit. We just saw it. When he was in New York, when he saw these things happen, he saw how the markets reacted. That's how he was able to make his money. He's not mentioning a chart. He's not saying anything about breaks of structure. He knows how the markets is going to react based off of central bank policies. When he sees that they're stimulating the economy, why would you want to go into safer assets and not stock markets? Right? So why would it look at gold right now? Why you're not going to buy gold if the Feds is starting to cut interest rates? So this is what helps you learn the bigger picture, right? So when you look at equities, why it's been bullish this whole time? Because they knew that this was going to happen. Like they see the setup, right? The downside of the stock markets is usually like black swan events or a hawkish Federal Reserve. We're getting a dovish Fed, and the black swan was like tariffs. But once tariffs, like, good job for you guys holding gold, right? So like this is just knowledge for you guys. You want to learn to swing trade, hold trades longer. You got to learn this information, right? Because it gives you confidence. It helps you move in this direction. All these other hedge funds and all these institutions, all they do is copy people like Ray Dalio and Warren Buffett. They have algorithms that does what they do. Like BlackRock is different. I think BlackRock is owned by the government, but they understand it, right? So they understand what's going to happen next. So this is what I teach the private group. This is what I teach you guys, is that when you pay attention to the cycles, right, you're going to predict what's going to happen next. So now they're cutting interest rates. They're stopping quantitative tightening. We're in a transitional phase, like what I was explaining. So what's going to happen next is it's a possibility. Why is the Feds looking to cut interest rates? Is it because something in the economy is going to break? Remember, in order for them to change policy, they need a reason. They can't just say, hey, America, we're going to cut interest rates, but in order for us to cut, you're going to have to lose your job. You're going to have to, your money, we're going to have to, pretty much higher inflation. We got to make life extremely hard for you in order for us to cut interest rates. They're not going to do that. What they're going to do is cause a problem, which could be like 2020, right? It could be like 2008. Something has to break where they can make the excuse to say, this is why you're struggling. It's because of this problem. So now we have to fix it, right? Because you're not thinking about it. You're not thinking like, oh man, the Federal Reserve is really fucking my life. You're not thinking about that. All of us was like 2020. We never blamed the government. We never blamed the central banks. We blamed the problem, right? So that's how they manipulate us. That's how you think about it. So the banks and the institutions, they know this. That's where the transfer of wealth happened. People bought oil at $0. Like imagine buying oil at $10, right? Nobody thought of that. Did you buy oil at $0, right? So they understood this. So they knew what was going to happen next, right? People sold oil when it was over 100 because they knew what was going to happen next. People bought gold, silver at those lows because they knew what was going to happen. Well, they knew that, oh, we're going to shut everything down. Oh, this is going to be an issue, right? So they understand the cycle. This is how they could stay ahead. This is why us as retail traders were always behind, because we don't pay attention to the cycle. Like Leon said, he's reading the principles, right? He teaches you everything. But most people wait till he dies, and then people is going to go, oh, shit, this guy knew so much. Like, he's been telling us this for years. But all they do is copy what he is. He's a billionaire for a reason, you're right? So, and then it's no coincidence. Oh, lower interest rates, weaker inflation, weaker dollar, weaker equities. He's been teaching this for years. So it's not a surprise. It's just that most people just don't want to listen. Like, you're not trying to listen. You know, I just want to listen to the kid on YouTube that has a Lambo. But this is where you could change your life. Because if you understand this, you could always be ahead of the curve. And not just in trading, also in your personal life. So if you know, oh, like this is going to spike inflation, things is going to get rough, how are you going to manage your money, right? You start managing your money differently, right? Oh, now they're going to do quantitative easing. Oh, I could take that loan out now because I'm going to have lower interest rates. Now I could pay back way low. I could get more money. I could better my business. Oh, maybe now I could start buying a house. Now I could get a car because we see that they're lowering interest rates, right? So you could start managing your life a lot differently when you understand this stuff. It's not just trading. Your personal life, you can manage it too. So you could always be ahead of the curve. You see a recession is going to come. It's not going to just happen randomly. Yeah, it's not going to be like, oh, tomorrow, October 25th, recession. It's not going to happen. There's going to be indicators leading towards it. Then it happens. By the time you know, it may feel like it was just so random. But in reality, it's not random. They know they're already preparing for it to happen. So when it starts to happen, you're going to be able to say, you're going to be saving more of your money, right? But you're going to be doing it before, right? You're going to be prepping. If you know that a recession is going to happen, you're going to be buying those canned goods before. You're going to be loading up your closet with toilet paper before, right? So you're going to be ahead of society. What does society do? The day of, they empty out the grocery stores, right? So that shows how majority of society is not paying attention to this stuff. This is why we're always behind the curve. So if this doesn't help, at least look at it from that perspective. It's like when some bad shit happens, people find out the day of, then they react. Other people see what's going to happen. They react first. So while it happens, they cool. It's not impacting them that much. All right. So hopefully that helps you guys. Put a 1 if that makes sense, guys. Does that make sense? Right? Because that's the problem. It's like you could get the message and then don't apply it. Right? So, but once you understand it, then you can start acting differently. You can start thinking about the markets differently. Right? So that's the goal. You know, it's like you can be able to predict this stuff and act differently. You could join a private group, man. That's where you get the information. Why is gold rising if CPI is higher? Like, that's a good question, Sergio. Like, most people don't understand. But because the dollar is gold is traded in US dollars. So yes, like in when you look at it from just a broad perspective, right? Without looking at the markets, yes, gold is a commodity. So higher inflation should trigger, right, gold to go higher. Yes. But the fact that it's traded in US dollars, right? And gold is now a hedge towards the inflation. So the fact that this is impacting central bank policy decisions, the markets act ahead of the decision. So the fact that CPI, right, if CPI is higher, like just an example, but CPI did come out lower. But even if CPI comes out higher, gold is going to push lower because markets is forward looking. So they know that if higher inflation, that's going to allow interest rates to rise. So with higher interest rates, it strengthens the dollar and the yields. So that weakens gold, right? But in without that situation, if higher inflation wasn't impacting rate decisions, then we will see gold prices rise with higher inflation. But the fact that it's impacting interest rate decisions, that's why we see the opposite reaction when it comes to gold. CPI is lower inflation, gold rises because of weaker dollar, weaker yields, expectations of interest rate cuts. Okay, so that's why we see gold rise even with lower inflation. But if it wasn't because of the expectations of what the Federal Reserve is going to do, lower inflation should lower commodity prices. So yeah, but the fact that it impacts the rate decision, that's why we see the opposite. Hopefully that makes sense. Okay. It's just because it impacts interest rates. So the markets are forward looking because of that. And that's what's driving the markets is interest rates. All right, so yeah, we got equities pushing higher. Gold was a really good move. Any of you still holding gold? Yeah, still holding. Yeah, good job, guys. Yeah, like shit, that shit is amazing. Craig, good job, brother. You still in one? Yeah, man, it's amazing. 100 pips and already closed. Yeah, good job. Just till the key level. Yeah, good job, guys. Like the current situation is an example of internal conflict. You see rising power in China, not borrowing to the U.S. Economy is strong. Education and tech is growing. Military is strong. Daryl breaking down all these indicators. And because military is important, right? Because that's how history is. If we don't build our military, it's easy for other countries to take you over. So now the rising power, like today is like education and tech, right? So tech is a very big thing because it goes into military and into your everyday lives. So tech is really important. So that's what's making China a powerhouse. But I think it kind of tipped its hand when the Treasury of State said, if China continues, pretty much, we're going to get the world banks to stop funding China. So if the U.S. is allowed to do that, it kind of shows you who really runs shit, right? So I thought that was kind of crazy to say because it's like, damn, y'all could just cut people off. So imagine what y'all do behind closed doors, right? This is why certain countries, there's no reason for certain countries to be so poor when they have oil, where they control commodities where it can make them ultra rich. But like people don't, like, we're so distracted in society that we don't think about this stuff, you know, like we don't care about it because we're distracted with everyday life, like sports, entertainment. So we don't really think about it, you know. Like when you dive deeper into this information, you realize like, oh, we're just a pawn in this shit, you know, like the government, like all this division, right? The government shutdown, what it causes, division, right? So when people are divided, you're not thinking about who is really controlling the narrative. So division is like is a main factor, right? So it's like people don't think about it. Like when you're divided, you can't unite, right? We can't have unity. It's also biblical too. What is like Babel, right? When everybody was all speaking the same language, then they was all trying to like they all tried to build to go into heaven. So like what did God did? He changed up everybody's languages, right? Because when we all won, we all have a common goal, right? So when you divide us, like everybody, the Tower of Bible. Thank you, Keegan. So am I close, right? Like, because we was all speaking the same language, right? So everybody wanted to go to God, right? So everybody came together, right? I think the point of it was people was trying to like be better than God at that point, right? Yeah, thank you. So what he did was he changed our languages, right? And that seek division because now we don't understand each other. So you think about that in society, how they do that with the governments, right? That we got government, we got Republican, and we got Democrat, right? They divide us. So when we're divided, we can't come to the same point, right? Different religions, different everything, different skin colors, right? So the Bible says we should love one another. We should all help one another. But with all this division in earth, right, we're not focusing on the bigger picture, right? That's why people are lost. This is why you don't even know that we being played like a violin because we're easily distracted, you know, and we all fall for it. You know, we all go through it. So that's how the government wins all the time. You know, so it's like, it's just as this. I could say all of this and a person would say, man, hell with Donald Trump. It's like hell with all of them, right? At the end of the day. And like nobody could really, like the problem is like we had Martin Luther King, right? We had somebody that tried to bring unity. And we so battered as a society that we could have somebody in front of us that tries to build unity and they would just have that person come out as a terrorist. They would assassinate the person. They would right away, there were messages about this guy being a pedophile, right? So it's so hard for people to wake people up about what's really going on because we're so tuned to distractions that we, like right now, like you wouldn't even really look at the information about this person. Whatever they say on the news, you're going to believe it. Then most people say that's not true. Other people will believe it. So that's how divided we are and distracted, right? So when you learn to look past it, you know, then you could really see, oh, okay, now I can see what's really happening. That's when you're going to start getting wisdom. That's when your life could actually start changing. You know what I mean? That's where you can start changing because you're going to break out of the cycle. You're stuck in a cycle because we were built to be in a cycle. That's why it's all a mindset, right? When you change your mindset, that's when you're going to start building faith. You're going to say, oh, I remember my old habits. This is why I used to be broke. Now, when I started changing my ways, right, now I start making a little more money, right? So it's just a mindset shift. But if we continue to have hatred in our heart, stay divided, right, you're playing the game that they want you in because that's how they control you. They control us through money, right? So we idolize money without even understanding that. Right, we idolize it. Like most people kill for it, they die for it. You're working 80 hours a week for it, right? So you're so distracted with money, you're failing to get to know yourself. Because you go to work, you make money, you come home, then you go to turn on the TV, play the video game. Then most people are forgetting to raise their kids, you know, because it's just like you're just playing an endless cycle. That's how they control us, and we don't look at it that way. And plus, where could you hear this information from? Let me ask you this. Where are you going to hear this from? Right? Not a lot of people is going to tell you this. Like, what are people actually listening to? You're like most people, like, I don't care for TikTok, but people go on TikTok just to get distracted. Like how you live a life watching somebody play a video game. Like that's the reality. And then expecting to be rich. Like you're expecting to be wealthy.
and streamers are making millions of dollars, bro. And like even that, like that shows that money is not going to make you happy neither. Like there are people that got the bag tremendously, and they're probably more unhappy than you, right? And when you look at their heart posture, you see they're not giving. They have anger in their heart. They're lonely. They have no, and most of the time they have no relationship with God, right? That's the main thing. Is like society don't teach us how to build intimacy and relationship with God. They're afraid of that, right? Because when you learn how to have intimacy with God, you will learn to love yourself, because God is teaching us how to love one another, right? So when you learn how to love yourself, you love yourself through loving God, right? Because he knows the things that can make you happy. When most of y'all is doing that negative thing, right? That's why you feel empty inside. You always have that thing, oh, I need to change this. So that's your spirit telling you right from wrong, right? So that shows, if you know right from wrong in your life, that shows that he still has a hand in your heart. But society don't want us to understand this stuff. They don't want us to love each other, because as Americans, right, they have to keep us distracted. Watch out for gold recovering because the yield is pushing up. They have to keep us distracted because like what we talked about, education, right? Education is very key. A lot of us Americans is very smart, but how they keep us from not understanding this information is by keeping us distracted. But to other countries, right, the American dream is a blessing, but it's also a distraction. Because if we don't have football, we don't have basketball, we don't have celebrities, right? We don't have music, we don't have video games, right? We don't have endless TV, we don't have social media. What you think people would focus on? They would focus on how they being effed every day, right? So that's why, because as we would, like, how would you feel if you really knew the government? Like, I've been working this job for 10 years. I've been at $80,000 a year. When I first started, I was able to get a house. I was able to get 2 cars, my refrigerator full of food. I was able to put my kid through private school. I was able to do all of this stuff. 5 years down the line, 80,000. Now you're poor. You lose your house. You got to give away one of the cars, right? You can't afford to put your kid through school no more. When you realize, like, oh, they're making my cost of living horrible. They're the ones that's impacting inflation. When you realize that, would you stand for that shit? No, right? So imagine everybody in the same path, but there's a person working the same amount of time, that same situation, but you look at their house, you see football jerseys everywhere. They go home, they're a Cowboy fan. They go out to the bars on Friday, get drunk. They get party on Saturdays, right? They see they check, like they was like, man, I'm making $3,000. Now it's like $2,500 because of taxes. Now another year, it's down to $2,000. They're like, they don't think about it, right? Now they're like, man, I got to work Uber now. So they just work Uber. And then now they got hatred. Oh, look what's going on with the immigrants, man. Like people like, man, hell with the Republicans or they're Democrat, right? So they easily distracted. So if you really knew what was going on, people wouldn't fall for that. That's how smart we are. But that's why they have to distract us so much, right? And then they take away what success really looks like. You know, if I ask you guys, what is success? Y'all right away, y'all going to think about a celebrity, an actor, an actress, right? You look at that as what success looks like. When I say what is success, most people think it's just money. But that athlete, like, they're miserable, right? Like, so we don't even know what success really looks like. We don't understand the true definition of love. We don't know what success looks like. And we can't change our mindset from how society is imprinting us every day. Right. So when you learn, the only way you're going to learn to break out of the shell is if you read the Bible, guys. Read the Bible. And even that is like, be careful to who you listen to, because like, just because a person could read the Bible doesn't mean they know everything. Like, Satan knows the Bible more better than all of us. Right. So build relationship. And then once you start asking for wisdom, you're going to be able to understand, like, because your spirit, your Holy Spirit is going to show you, is going to tell you that, oh, what's good and what's bad, because you're going to feel something inside. Most of y'all feel it all the time too. When you're about to do something stupid, you get that feeling in your gut. It feels like anxiety, right? So that just shows that, your spirit's telling you stay away from that, right? When something good happens, you just know that is a good thing. So most of us know it. You just can't ignore those signs. You know, like you expecting like God to just scream it out to you, right? But sometimes it comes through that. It comes through a person one day. Like, don't y'all get those weird interactions with people where it's just like you think of something that somebody just randomly say something to you, you go, damn, like that's crazy. Like I was just thinking about that, right? Like he like that shows that he got his hand on you, you know. So, but we're never gonna beat the game that we're playing in if you don't wake up. Like that's how I know it's real, because even if you don't reap the blessings yet, you know when you commit sin, everything that is rewarded from sin comes true. So you all know that, right? When you're easily distracted, when you're doing drugs, when you're submitting to lust, right? You're going to lose something, right? You're going to lose your family. You're going to lose your job. You're going to be distracted. Your business is going to fail. That is all the things that is required. What happens when you follow for sin. So if all of that is true, what do you think is true when you actually follow and obey God's blessings, right? You follow and obey God, how he tells you to move through life every single day. So what do you think would happen when you actually submit to that? But society teaches us not to submit, right? This is why from a kid, they say we was all born with sin, right? We was all born with sin. And they teach us that as a kid. Depend on yourself, right? So they tell you all of this stuff. Oh, don't listen to nobody, but listen to yourself. Trust yourself. But in the Bible says, submit to God. Have faith. We want things in our timing. I want to be successful now. He is molding you, right? This is why most of you are struggling. Most people are going through the fire, but we have to look at that struggle differently. This is what I said on the last call that we did on Bible study, right? We all go through pain, but you have to look at it differently. You can still find pain. You can still find joy through pain because you know he got his hands on you. So the problem is you want the reward now, but you're not the person that is willing to take care, that's willing to handle it, right? Most people want a big following, but the person you are now can't handle it, but he's molding you into becoming that. So going through the process, yeah, it sucks, but that shows you got some growing to do. Make sense, guys? So if you're failing at trading, you're taking bad trades, you're blowing accounts. If you don't mold yourself now, you can't handle that 100,000. You can't handle that $1 million because you're going to blow it too. But it's going to come one day. But if you're not prepping yourself now to be able to handle that, when that opportunity comes in front of you, you're going to mess it up because you're not prepping for it. So it's all about preparation. Stop idolizing and stop being jealous of people because you don't know what that person went through in order to get to where they are. Because if you saw the hell that they had to go across to get to that position, you would say, hell no, right? So that's why you cannot be jealous of other people's blessings because you don't know what they went through in order to get there. But you all are going through your own journey, all right? So look at the light from your situation. Be grateful that you're going through the pain because that means he got more work for you. But you may not see it for yourself. You may not understand, but just have faith. Right. So that's why I believe in it. All right. It's 9:30, guys. See some volume. At 9:45, we got data. But yeah, like it's deep, you know, but you ain't going to learn this stuff if you just listen to what society tells you to do. If you act the same way, you're acting as everybody. This is why, like, even the book with, what is the book again? When we talked about the money that time. It was like, I forgot the book's name. Let's see. I forgot the book. Yeah, I'll look at it. I forgot it later. But he talked about it. If you spend the way everybody else is spend, you're gonna have the life as everybody else, right? We don't understand money, right? So when you get paid, you act with that money just like how everybody else act. You pay your bills, you just go out, you do all this crazy shit, and then at the end of the week, you realize where my money is gone, right? Because that's how we act as everybody else. We don't learn how to manage our money. We don't understand what's coming in, what's coming out. Most people don't have a schedule or a budget. Most people don't have that, right? So when you act like everybody else, this is how they want you to be. They want you in that rat race. So in order to break out of it, you got to learn these things and apply it, you know, because it's information, knowledge, and then wisdom. right? You could take in the information, but the wisdom is like putting it all together and doing it, right? Most people got a lot of knowledge, but they don't act on anything, and that's what sucks. So you got to apply it, and it makes you uncomfortable. But yeah, like good job for you guys taking gold. Dollar is still pushing lower. Equity is still at the highs. So we should see that volume come in place. $9.45. We should get this other data print. Yeah, like what he says, if everyone was united, even with a small community, life would be so. Yeah, and it also depends on the person. Gold is bullish because of the weaker inflation, so weaker dollar. Yeah, and like that's why I said it also depends on who y'all listen to and who y'all follow, because money is very corrupted too. Like money would change people, so like you got to make sure that person has really good heart posture and stuff. Yeah, because just because they have a platform and a lot of following doesn't mean that they do good. That's why, like even now, what I recommend you guys to do now, like because it's like a lot of us want to be good people. A lot of you want to be loving and caring. So like slow down in life, slow down, right? Because a lot of us just we're moving so fast you don't even know where the hell you're going, right? Slow down, and when you see somebody, just ask them how their day is, right? You see somebody that is struggling in the streets, offer them something, give them water, food, $1, something. Be generous, right? But you can't say what all of us says, oh, if I had money, I'll do it now. No, if you're not doing it now, you ain't going to do it when you're a millionaire, right? Because the money just inflates your ego. That's all it does. If you're an asshole, add $100,000, add $1 million to an asshole. He's just going to be a bigger asshole. Make sense? So that's all it is. If you're a loving person, you add $1 million to that loving person, they just be more of a loving person, right? So if you're you got to change who you are, right? So if you say, oh, I want to be caring, right? I want to take care of people, right? You could do that now. You could do it with the little that you have, right? So if you got $10, you could give somebody $1. It's not like, oh, if I get 1,000, then I could do it. No, if you get 1,000, you're not going to give a person the $10. So it's not money that's going to change you. But society makes us think that. We got to change first. Then the outside material things come after, right? We want like most people right here in the trading group, like, oh, I want to learn, I want to educate myself, but let me pass the funded account first. It's not going to happen that way. You don't have the information. So how are you going to be successful at trading if you don't know anything? How are you going to be profitable at trading if you don't know what's going on? You're going to continuously lose. So people want the money first, then the reward. And it doesn't work that way. Make sense? So that's how majority of people act. You have to get the information and knowledge first. You got to change who you are first, then the rewards start coming after. That's just how it works, but it is somehow like we think of it all ass backwards. We all greedy. We all, like we all selfish. We have bad heart posture. We all do. Right. Like I was just listening to, I don't know if y'all guys saw that homeless video, that homeless man video where he was preaching to the guy in the car. Like that shit it's amazing, that shit. But most people won't take the time of day, right, to hear information, because you're expecting somebody to give you that type of information. That's a millionaire. That's on top of the mountain. You will hear real stuff from people that's going through things and then on the way up. But usually when people is in the top of the mountain, you're not going to see the genuine side. You're not going to see it because they went through it all. So you're just getting the perception of somebody in the top of the mountain. So like you're just getting that. But when you talk to somebody that's going through something, that's when it's relatable. That's when it hits more, because you're like, oh yeah, now I can see what's possible. But most of y'all is expecting these type of messages that come to the person that you idolize. They're not going to tell you this stuff. So that's why you have to be cautious about who you're listening to. Yeah, like the best ones, like, I got out of UJ already at break even. I knew I should have entered. Like equity is higher, gold is higher, dollar. Yeah, it's already expected for the dollar. Let's see what happens for the rest of the day. I'm not changing the bias yet, but let's see what happens at. We got 9:45 PMI. I'm not like if it comes in lower, that should help. Like it should help the continuations if this comes in lower. All right, so we got a few minutes. But yeah, good job, guys. Anybody took equity buys though? Like Nasdaq, US 30, S&P 500. No, the data is lower than expected. It wasn't mixed. Yeah, gold doesn't. Yeah, that's a good question with gold. Like I answered it earlier though, already. It's because of interest rates. All right, so the like equity is pushing higher right now because we know quantitative tightening is actually ending. Plus, we got a rate cut, so that's what's actually helping the stock market rise. Do you think if it comes in higher, it will give a pullback? I mean, it's a possibility. Like probably the dollar, right? We can see if it comes in higher, that could probably cause the dollar to pull back. But I don't expect it to be that important. But we don't want to surprise neither. You know, like if we get first, let me see if they actually put out this print first. Let me see if they actually putting out this print first. All right, yeah, so yeah, it's coming out. Yeah, the goal with this print is we just don't want a surprise. That's just really it. Like if it's above, even if it comes out lower, but if it's still above a 50, that's still expansionary, right? So even if this does come out lower, like in order for it to be like a no-brainer, right? If it's below a 50, then I would say the dollar sells should hold more aggressively. That's where we should probably be eating those dollar sells if it comes out actually lower than a 50. If it's just like a 51, 52, like I would still expect weaker dollar, but it's not going to really, it's still expansionary. It still shows strong growth. If we get above, like if we get like a 55, right? I think that just continues equity buys showing strong growth. Could we see dollar gain a little strength for that? Is a possibility, but then we look for sells in a dollar afterwards, right? We look for sells in a dollar after, but I don't expect anything to really matter with this print because if inflation is not really, I'm not expecting much to happen with this. But what we want is just, I would want to see strong growth. I would like to see like a 51 or 52. I would want it to come out lower, but still support stronger growth, right? Slow declining of growth, because this then supports equity upside, because at least now we know the Feds ain't cutting interest rates because of recessionary fears, right? So that's why I'd rather see that. If we get like a 49, like shit, that could possibly cause equities to recover. Like we could possibly see equities recover. But that would help dollar push lower, because maybe that was going to show that the Feds should hurry the hell up when it comes to cuts. So that's what we look forward to. Rod, take your profits, man. Take the profits. If you're you can take your profits. Could it continue? Like obviously it still can, but enjoy your profits. It's a Friday. Well, just ending, because ending QT is leaning towards quantitative easing. That's why. So they're just wording it differently. They're not gonna say like like early QE, right? Because we're ending QT, so that means we're early into quantitative easing. It's a good question, right? Make sense now? So they're just like, we're still in the late phase of quantitative tightening. So next week, like the bank, like JP Morgan, Goldman Sachs, they're expecting QE to start next week because the chart, right? Did I post it here? I don't think I didn't post it. I didn't post it yet because it's like every week you see how much money the central banks is putting in the system or taking out. So we ended up going below that threshold where we're ending QT now. So that's why they just worded it that way. So late expansion, right? Early QE. So we're ending quantitative tightening, leading into early quantitative easing. Okay. So we're getting to that next cycle now. Beaver, make sense? It's just that instead of saying that we're now in early QE, they're just saying that we're ending QT. So ending QT obviously leads to quantitative easing. So that's why it's the early stage of it. Yeah, so that's what's going on. So now we're seeing a shift in the bigger cycle, right? So the bigger cycle is happening because we had QE because of COVID. And then after that, right, higher inflation, higher COVID, right? So now they had to put the brakes on. Now we injected so much money into the economy because of COVID because they need to protect the businesses, protect the banks. So then now we had QT, right? They're taking money out, right? So they're not putting money back in. They started taking money out, right? So that's when the dollar started gaining strength. So that's when they had to hike interest rates now. So now they put restrictions on banks. People couldn't take out loans. Right. So then now with the QT, we're at the end of it. We're at the end of that now. So we're seeing the consequences of what happened during 2008, 2010, 2020. So now we're seeing the consequences of how all of this affects till now. Right. So the problem is I think what a lot of us missed was the recessionary state. And during Biden's administration, they changed the definition of what a recession is. All right, so data came out higher. So this is what supports a stronger dollar. All right, so this is why I didn't want to see that. So this is going to help give dollar strength. But do I expect dollar to just melt to the up? Probably not. But this is like a signal probably to take profits, break even, right? I would still expect overall dollar weakness, but it's a possibility we probably won't see it like today just because this came out higher. So now we're seeing like recovery states in all the pairs. At the end of the day, we could probably still see weaker dollar in the next 2-3 hours from now. Probably like after 11, once all the data is out, we could still probably see weaker dollar. Okay. But this supports, to me, this supports stronger growth. So I like this for like equity still, because obviously this is not going to change interest rate projections. They're still cutting rates, but this could give a little pullback on the dollar. Right, this could give a little bit of pulls backs on gold, could give a little pullback on equities. So that's how this print could happen. So now at 10, we're gonna get sentiment, but mostly for this, like if you're trading equities, Michigan sentiment, right? For equities to push higher, we want to see inflation lower. 1 in 5 year, we need to see that lower. Then we want to see sentiment, conditions, and expectations higher. That's normally good for equity buys. All right. If everything is red, that should help dollar weakness. Okay, if everything is red. But for equity buys, like it would be to see sentiment, conditions, expectations green, and then inflation in the red. That would help equity buys. But normally this data, the focus is on inflation. Let's see how the inflation expectations are. Hopefully that comes in red, then we could see, the continuations. That would still help. Yeah, glad it makes sense. It's a good question. It's a good question. Yeah, most people won't know. That's what I mean. Like that, like stuff like that just go from one ear out the other for most people. But we're dealing with the transitional phase, like of, but the markets is already reacting to it. So you see when we hit quantitative easing, right? When they start easing the markets. But first we need something to break, So either it's going to be the credit crisis, like either it's going to be credit where taking out loans and banks, like the banking sector starts getting a huge impact, right? It's either going to be that, or is it going to be the government, right? What else? It could be, I would say like those two things. It's either going to be the credit crisis, or it's going to be like the government debts problem, right? It could be inflate, because like if they start QE now, it doesn't make sense, because it expecting it to be the default, the car loans, the banking issue, right? It's not housing, so we know it's not that. Yep, debt problems. That's what it's gonna have to be. It's gonna have to be that, The debt's too high in the US. Like they're not paying back their debt, right? The banking system is gonna fail. So like stuff like that could cause a recessionary reaction, which we're going to see equities fall. Then we're going to see the transfer of wealth. That's when the QE starts. That's when equities will start buying back up. You know what I'm saying? So gold is already hitting higher because they know something's broken, So it's like, get into gold. But equities pushing higher, it's definitely a bubble. Inverse bubble is definitely a bubble, So I personally think equities is pushing the all-time highs the way that it is, because whenever that time comes for the reversal, it's still going to be somewhat of a soft landing. Like if we're at, like right now, what damn near 47,000 on a US 30. If we get a drop, may hit 45, may hit 40,000, like Nasdaq, maybe hit 22,000. It's still good. You know what I'm saying? So that it could recover from that. So it's not going to be like anything massive. The news is going to make it horrible, but it's going to be some sort of a recovery. And then QE is going to start. All right. So that's going to be the cycle. So when you understand that stuff, you can prep for it. Like you see right now, dollar higher because of the stronger PMI. So it was just before we saw it, right? It actually started happening. So that's why dollar pushed higher, because dollar wasn't weaker. So a higher print, we know that investors are looking towards looking to buy the dollar or cause dollar to consolidate, because the inflation data coming in lower was just what was not a surprise. So that's the reason why we see the pullbacks. Yeah, appreciate it for the share, guys. All right, we got 10 minutes for this other data print. So I think the best bet would be if we get a lower print. Yeah, my bad, Ricky. Yeah. So understand, like, today is Friday, so we got a Financial Fridays call. So I don't probably like around probably a little later today. We will like I'll send you guys a Zoom link for that. See what else we could talk about. I was thinking about doing like a fitness call too, like because we got a lot of fitness experts in here too. They could probably like give some good advice. I think we could do. I think we could probably do wealth building today. We did mindset. I think we could do. Yeah, I think we could do wealth building today. All right, guys, we got 6 minutes for the data to come out. Like for this, like now, it's not about opportunities, right? It's just about if you could hold on to the trades, right? So in order, if you're in the stock market, Nasdaq, US 30, S&P, if you want additional upside, hold on, let's see. U.S. sanctions on Russia could push. Yeah, so the sanctions on Russia, this is Barclays. They're saying that it could push oil prices above $85 a barrel. So I think OPEC will step in if that's the case. But yeah, the sanctions on Russia, if they do get worse, is going to cause oil prices to rise, which it has already been doing. But now we got 5 minutes. So if we want equities to push higher, to continue what it's doing, we need to see the inflation data 1 to 5 year lower, right? Then we need to see sentiment conditions and expectations higher. That's what should give us those continuations. I'm not expecting this data to like make a big move, but it's just indicators, that we need to get by, and then we can see the real reactions, like how the market is going to react. For the dollar, if it's all in red, that still supports dollar downside, but we need to see inflation expectations lower just to give us more reasons for the rate cut to come in, dollar weakness, but the problem is we already have that for the dollar. So that's why the dollar is not really reacting, because it's already expected. Okay. But this does help gold upside, right? Because look at, you can't see it because y'all not in a private group, but you guys look to the left, you can see the yields, right? The yields is the story. So we saw that the yields push lower for the data, and then we saw the yields recover. So we're above that 4%. It'll be great to get the yields below the 4%, the 10 year. Then that could be like a good sign. We could see weaker dollar. So the yields is what's telling the story right now, and the yields is not pushing lower. So that's the reason. This is my Discord group. Like, what app you think? Like, damn, dude. You could probably it's not on Instagram, dude. You could do it on probably Facebook. You could join it there on Facebook. I mean YouTube. Sorry, YouTube. All right, we got 3 minutes. All right, we got 2 minutes, guys. See what we get for this print. We could probably end it after. But yeah, if you guys took trades, man, like don't overtrade. Now you did your job, right? You took gold buys, you did your job for the day. That's how you build consistency. Now we wait for the next reason. So what I expect to happen next, maybe we could get some more headlines with Trump about either Russia, Ukraine. We also know that the China meeting is still going on, right? So that we can see if there's any more comments regarding China. Could be another focus as well for the rest of the day. But other than that, this should be the direction. If it doesn't hold, it's just because we got a rate decision next week and it's already expected. But now we just need something new. So let's see what he says about China. Malaysia? Who, you or Trump? Yeah, right. Yeah, I got you. So yeah, it's the weekend. So normally he likes to speak when market closes. Yeah, we can see what happens, like pretty much afterwards. All right, we got 20 seconds. See what happened with this print. All right, 10 seconds, guys. See what's going on, and then we can talk about it, and then give you guys what to prep for. 3, 2, 1. Nothing yet. Nothing. Do we get Michigan data, right? I know. I didn't even check to see if we get the Michigan data. We probably don't even get it. Let's see. Yeah, if it don't show in the next minute, we just don't get it. Probably don't even get Michigan data. All right, it's coming out now. Yeah, so expectations did come out lower. All right, so inflation, the 1 year is as expected, and then the 5 and the 10 year came out a little higher, so it's mixed. So yeah, not looking at So for this is it's the university data, but yeah, I'm not seeing anything in my stream, but it is on. It is on. I see the prints coming out, so it's mixed across the board. So sentiment did come out lower, then conditions came out lower, and expectations came out lower. But the 1 year as expected and inflation is higher, so not really a good edge. Like not that I'm expecting this to really care, like not expecting the markets to really care about it, but it just doesn't give us an edge to what to look for. So now moving forward, I think it's just about focusing on what Trump says. If he comes out, talks about geopolitical tensions, right, that could impact the markets. What he says about China could cause impacts to the markets. So if he comes out and talks about, because the first is where he's expected to increase tariffs to 155% on China. So if he says anything like that cause escalations, that could definitely cause equities to push lower, right? That uncertainty could cause gold to rise if we see tensions with China happen today. Russia, Ukraine, markets really don't care about that. If we see Israel and Gaza, like markets don't really care that much about it. But the focus on tariffs is more market moving. So still, like for today, I would rather still see if we get a weaker dollar to still come in place. Might be slow, but a weaker dollar, weaker yields should still be the direction. Stronger equities should still be the direction. Gold pushing higher should still be the direction. Okay. But if we do get pullbacks, it is a part of the markets. It's a part of the game, because so far what we got today doesn't really change the bigger picture. It just gives us continuations of what we already know. So that's why the moves is quick, and then we see slow price action correcting. the only other option for me to want to take a trade is most likely if we get a news headline that causes market fear. All right. So that's what I'm going to leave that says. Have a good day, guys. Enjoy your Fridays. Guys, I'll see you guys in a private group. And enjoy your profits, guys. Please don't give the money back to the markets. Please. Just take your win and wait for the next opportunity, which will come. All right, guys. Have a good one.
Recording.